the global economy runs on infrastructure, the transport systems that move goods, the energy grids that power industries, and the digital networks that keep markets connected. But across emerging markets, the gap between what's needed and what actually gets built is widening. Ahead of the G20, the B20 Finance and Infrastructure Task Force set out 3 priorities: get more projects investment ready, unlock bigger, more reliable pools of finance, and fix the flow of funds. Lungisa Fuzile, CEO of Africa Regions and Standard Bank Offshore and Deputy Chair of the Task Force, reflects on how these recommendations were shaped and their impact for emerging markets. Here's that conversation.
The best way to think about it is, what will it take for Africa to attract the volumes of resources, to mobilize $100 billion more per annum towards infrastructure? Number of things. One, we have to make sure that we have a pipeline of investable, bankable projects as per our first recommendation as this task force. And how do you get to that? By allocating resources, financial, human, and otherwise, to project preparation, among other things. Once you do that, then you have got the opportunity to court, to entice the pools of savings in Africa and across the globe to come to those funds. And we've seen how capital moves in the direction of returns, in the direction of opportunities. If you create opportunities, if you set a regulatory environment that creates a conducive setting for people who want to make money but are prepared to do good at the same time by investing in Africa's prosperity, then it's a win-win for Africa, but also for the investors.
Yeah. I'm worried about cost of capital. I'm worried about youngsters starting out. They're trying to get into the market. Yeah. All right, you've got your corporate, they're fine. But what about young businessmen in Africa trying to get into it?
There are a number of elements to that, Ray. Let me talk about 2 things. The first one is that sometimes that cost of capital is informed by misperceptions of the risk associated with lending to young people. We tend to assume that young people are too high a risk than really warranted. Closing that information gap by practical means. For an example, if you just take what are the things that tend to make investors a bit jittery about young people. They don't have a proven record of doing things. Now, that takes me really to the second leg of what we've got to do. That is where credit enhancement instruments or guarantees become relevant. Similarly, blended finance, where philanthropic resources that are patient capital, so-called, become important. Partnering them with private capital in a way that de-risks lending money to the youth, spreads the risk or minimizes the risk. Yeah. And in that way, we can go some way towards ensuring that not only young people, by the way, but also countries that have got a difficulty proving their credit worthiness.
Well, that's the thing.
The opportunity to get the resources.
That's exactly that, because you have those in sub-investment grade who can't get that money, you can't get that. But yet you want to take a chance on them because there is something there. It's a difficult fine line.
Development finance institutions, Ray, local, regional, and global, exist to correct for those kinds of market failures. In many instances, what we need is a partnership between those development finance institutions, philanthropic financiers, and of course private capital come together, share the risk, so that in some instances you can have the first loss covered by those development finance institutions. And some of them, by the way, are prepared to take that first loss. If not, they are prepared to provide credit enhancements of one sort or another, which then minimize the risk associated with lending to those countries, and in some instances, they would have funds available for private individuals too. But all of these, they exist. What sometimes gets required are efforts like we have been embarking on as this infrastructure and finance task force, which is to elevate the discussion, shine the spotlight on the need, and of course propose practical implementable solutions that can be followed by countries, by the globe, to improve the situation.
I want to talk about those solutions. Now it goes to the G20, that's what's coming up next. How confident are you that the G20 will give you guys the tick and follow through with these suggestions, or is it, let's wait and see?
We are confident. I mean, I was happy at the session that you and I were just now, where people were saying, one, we wouldn't do this work for the entire year, given how precious our time is, if we didn't believe that it would have an impact on the one hand. Yet on the other hand, you've got to be realistic. If you want to influence politicians who come from such diverse backgrounds, you would be unrealistic to expect that in a period of 12 months you work on proposals, you put before them in a day, the following day the world is a different place. That's unrealistic optimism. You need optimism that's tinged with loads of realism. We look at what would happen over time. These things require that first you must have conviction in what you're proposing, and what you're proposing must have the ability to attract people towards it, to get people to listen to it, which is what we have tried to do in how we have couched our recommendations. We've tried to make sure that they can be caricatured by extremists or those who hold extreme views of one sort or another, pardon me, on the one hand. But at the same time, you must be resolute in pushing for what you believe in. Now we've put the recommendations. We know from the political office bearers that we've spoken to, from the regulators that we've already spoken to, here and in different parts of the globe, that there is reception to these recommendations. The challenge now is going to be to persist and be consistent with selling them, convincing the people about their appropriateness as a solution to the contemporary challenges that Africa and indeed the globe is facing at this point in time. I'm convinced that if we stay the course, notwithstanding the noise, in time, a big part of what we're recommending will be adopted. If 50–60% of it gets adopted and implemented, I will sing hallelujah and celebrate. Serious. We are not directing these authorities, be it the G20 or even the political leaders on the continent and around the globe. We are persuading them.
Final question, what's your big takeaway from the B20 Finance and Infrastructure Task Group? What's your big takeaway?
This task group has identified the issue of infrastructure and infrastructure finance, especially for Africa, but beyond Africa too, as needing urgent attention. One. Two, it has come with recommendations that fall under the rubric of three broad sets of recommendations that are practical, implementable, that reasonable people ought to buy into, and take them along and do something about them.
That was Lungisa Fuzile, CEO of Africa Regions and Offshore at Standard Bank.